Alternative formats for this presentation can be found on the Financial Services website. Visit or contact us at the Financial Services training page. Email us at finance.training@queensu.ca or give us a call at 613-533-2050. Revenue and cost recoveries. Distinguishing between internal and external transactions and accurately recording revenue and cost recoveries is an important part of administering financial activity within the GL. Business units and faculty offices depend on accurate data for performing data analysis to determine how much of their reported revenue is being generated from increased cash flows versus that of existing cash flows within internal units. Internal transactions within Queen's includes transactions that take place within administrative units, departments, faculties, schools, and other internal entities. External transactions include stakeholders such as students, donors, granting agencies, external affiliates, customers to whom we sell goods and services, and miscellaneous revenue collected from other outside parties. Internal transactions include internal sales, when a Queen's ancillary operation sells goods or services to another department or unit within Queen's. Internal cost recoveries, when one Queen's department or unit recovers charges from another Queen's department. An internal revenue transfer, when one Queen's department or unit transfers internal revenue to another Queen's department. Internal sales. Only ancillary operations will record internal sales. There is no net financial impact to Queen's. Ancillary operations include business units that provide goods and services to the university community, covering their full operating costs, including indirect costs. They may also contribute to general operating expenditures. Ancillary units represent Fund 20,000. Examples include Creative Design Unit, Food Services, Donald Gordon Center, just to name a few. When recording an internal sale, the price will include a markup to recover indirect costs. For example, Ancillary A sells services to an internal department and charges $46 per hour. The direct cost of the service is $45 per hour. The indirect cost, or markup, is $1 per hour, for a total cost billed to the department of $46 per hour. An internal sale is not subject to HST. The sale is recorded as a sale and cost at the same time and is done so by way of a journal entry. An internal sale is not recorded in an accounts receivable or an accounts payable account. Records maintained by the billing department should include the customer order, a detailed record and delivery date, a description of the goods and/or services, and the date the goods were delivered or services rendered. For example, the Creative Design Unit creates custom signage inserts for the Biology Departmental Office. The entry to record the internal sale is a debit to the Graphic Design account 606007 and a credit to the Internal Sales and Services Revenue account 450101. The line description on both sides of the entry should always inform the account holder of what is being charged and/or credited. Some important tips to remember. Internal sales only apply to ancillary units, units administered through Fund 20,000, and the credit side of the entry will always be to account 450101. An internal cost recovery item is when one department recovers charges or costs from another department. There is no net financial impact to Queen's. Primary objectives to keep in mind when recording internal cost recoveries is always record transactions in the correct fiscal year. The billing department will always maintain financial records that support the legitimacy and appropriateness of the transaction. For example, in the case of salary and benefit charges, be sure records include a name and salary period. For long-distance phone charges, keep a record of the monthly invoices paid. And records for photocopying charges should show the unit cost, number of copies, and the period. Other important notes to keep in mind when recording internal cost recovery journal entries. Always credit the ICR account applicable to the corresponding expense budget node. The recovery transaction must not be recorded in advance of the source transaction, and it must not be used to record a transfer of funding to another department or a research project. For example, Biology's operating fund recovers photocopying costs from a research project. The entry to record the recovery is a debit to the research project using the printing photocopying account 606001 and a credit to the departmental operating fund using the ICR account identified under the 606 budget expense note. In this case, the ICR printing services account 606002. The line description on both sides of the entry should always inform the account holder of what is being charged and/or credited. One tip to always keep in mind when recovering all or any portion of the cost from another internal source, the ICR account used to record the credit side of the entry is the one located under the budget expense note containing the account that was originally expensed. To review an up-to-date account listing, visit the Financial Services training page. Internal revenue transfers. An internal revenue transfer is processed when reallocating internal revenue funds from one unit within Queens to another unit within Queens. Internal revenue funds are funds that cannot be tied back to an external source. There is no net financial impact to Queens. For example, the Faculty of Arts and Science Operating Fund provides research startup funds to a biology research principal investigator's internal research project research fund. To record the entry, the Revenue University Funds account 480001 is used on both sides of the entry. Some important tips to remember when processing internal revenue transfers. Account 480001 must be used on both sides of the entry. Account 480001 should never be used to transfer carry-forward monies within the Operating Fund 10,000, to or from agency funds, the 9,000 series, to or from externally sponsored research projects, and should never be used to transfer in-year revenue activity that can be tied to an external source. External transactions include external revenue, defined as revenue received from a source external to the university. External cost recovery, when a Queens department sells goods or services to an external party with the intent of recovering all or a portion of the expense from the external party. External revenue and external cost recovery transactions include income-generating activity resulting in cash that will be received by Queens as a result of negotiated agreements with external parties such as organizations, agencies, corporations, and/or individuals considered external to the university, in exchange for goods and/or services provided by Queens staff or departments, or in support of ongoing university activities. External revenue. Revenue received from an external source, a source outside of the university. There is a net financial impact to Queens. Sources of external revenue include donations, money deposited and recorded by advancement services, government operating grants, most of which are received and recorded by the Planning and Budget Office, research awards, revenue which should always be received and processed by the research accounting team in financial services, sales of goods and/or services, funds received from an external source in exchange for goods and services provided by Queens departments, student fees, which are processed by the university's student financial system, except in the case of non-credit student fees, which are processed by applicable departments. External revenue may also include miscellaneous revenue, such as fees or rentals, processed by department generating the revenue. When providing goods and/or services to external customers on a sales or cost recovery basis, there are 5 financial objectives to consider. 1. Limit contractual liability. 2. Set prices sufficient to cover all costs. 3. Calculate the correct applicable sales tax. 4. Record the transactions in the correct fiscal year. And 5. Be sure to collect all amounts due. Here are some tips to keep in mind. When depositing or recording external sales or cost recovery, always post to an account that begins with 45 or 46, except when recovering from an external source using the cost-sharing approach, which we will discuss later in this tutorial. Never use account 450101 or 480001. To review a current account ID listing, visit the Financial Services training page. An external cost recovery is when the initial expense is incurred by Queens with the intent of recovering all or a portion of the cost from an external source or party. There will be a net financial impact to Queens. There are 2 methods of recording external cost recoveries. The first method is the expense recovery approach. Use this approach when the university is responsible for incurring the initial cost but will recover all or a portion of the initial cost. the original expense remains recorded in the expense account that begins with a 5 or a 6, and the incoming external recovery reimbursement is deposited or recorded in the account that begins with 490. For example, purchased equipment from the equipment purchases account 612004. In this case, deposit or record the recovery reimbursement revenue to the external cost recovery revenue account 490010. A tip to keep in mind, departments are responsible to charge and collect applicable taxes on the initial expense. To learn if taxes apply, visit the Financial Services Procedures page. The second method used for recording external cost recoveries is the cost-sharing approach. Use this approach when the university is responsible for incurring the initial cost but will recover only a portion of the initial cost. The original expense remains recorded in the expense account, an account that begins with 5 or 6, and the incoming external recovery reimbursement is deposited or recorded in the same related expense account that begins with 5 or 6. For example, purchase equipment from the equipment purchases account 612004 and deposit or record the recovery reimbursement revenue to the same account 612004. The same tip applies. Departments are responsible to charge and collect applicable taxes on the initial expense. To learn if taxes apply, visit the Financial Services Procedures page. How may we help you today? If you have questions, give us a call at 613-533-2050. Email us at finance@queensu.ca or visit the Financial Services website. We are located at 207 Stewart Street, 3rd floor, Rideau Building. Hours of operation are Monday through Friday from 8 a.m. to 4 p.m. We are closed during the noon hour. This concludes our tutorial. To learn more or to review additional training resources and video tutorials, visit the Financial Services training page.